If you are like most people, you will spend 35 to 40 years working to provide an income for yourself and for your family. As a reward for all of that hard work, you'd like to retire someday so that you can do the things that are most important to you. The American dream at one time was to work for one company for those 35 or 40 years, retire, and have that company provide you with a retirement income. But in the last few years, that dream has been shattered. Why? Because many companies today are only in existence for a few years. And if they're successful, they're bought out by another company, and as part of that sale, many of the employee benefits are lost, including the retirement package. Being left without a retirement plan, or as is the case with many of us, having a plan that doesn't provide enough to live on, leaves you with only one option besides poverty. You must set up your own. Having your own retirement plan means that you are responsible to put money into that plan. The most popular of these is an IRA. Newer versions now exist in the form of Roth IRAs, 401ks, 403bs, or Keogh plans. But the interesting fact is today only about 40% of the American working population has some type of established program for their retirement. That means that almost 60% of American workers are counting on the government to have some type of assistance program to provide for them when they reach retirement. And depending on Social Security or Medicaid is shaky at best. Today, financial institutions specializing in mutual funds, stocks, and bonds currently control the more than $3 trillion invested in these retirement plans. But what has happened to those mutual funds and stocks and bonds? Well, in the last 3 years, we've seen two major automotive industries in the United States being taken over by the federal government. We've seen a multitude of banks shutting the doors, leaving many with only a few pennies of the dollars that they once had in their accounts. Wall Street has spent the last 3 years trying to pick up the pieces of one major scandal after another. The recent unrest in the world stock markets has kept many an investor on pins and needles. Since the beginning of 2008, the U.S. stock market has shed over 40% of its value, with trillions of dollars being lost. IRA and 401k investors are especially worried that their retirement funds won't be there when needed, and for good reason. Much of their investment capital is tied up in mutual funds, and recently they have helplessly watched in horror as their savings have evaporated. Some of their retirement plans have dropped in value by as much as 80%. Right now, most retirement funds are only earning between 1% and 3% per year. Even if you're going to regain the average 6% return that you once had, many people will not have enough time before retirement to regain what they've lost over the last 3 years. To cut their losses, some investors have liquidated their accounts and moved them into cash funds. Such moves don't stop the bleeding, but many are wondering what they can do next. Cash doesn't earn much, whether it's held in super safe treasuries, CDs, or money market accounts. Investors are lucky to get 2% on their money, and even those earnings are taxed. Well, some investors have been taking a more active role in managing their retirement accounts by moving at least some of their money into what's known as self-directed IRAs. The self-directed IRA is exactly what it sounds like. The investor chooses where the money is invested. In a self-directed IRA program, the investor conducts their own research and chooses where to invest their funds. The main benefit of a self-directed IRA is that it offers investors 100% control of how and where their money is invested. So what can a self-directed IRA invest in? The rules governing what they can invest in are exclusive, not inclusive. That is, the rules only specify where you cannot invest. Therefore, there's an unlimited array of possible investments that fall well within the permissible boundaries. The IRS only defines the assets that are excluded or prohibited from an IRA investment. These include life insurance contracts, collectibles such as antique rugs, cars, stamps, furniture, and finally, you can invest in capital stock in an S corporation. So why hasn't the self-directed IRA business been publicized? Well, because of their efficiency and profitability, traditional IRA providers control about 97% of the IRA industry. Their huge marketing budgets allow them to maintain a strong public presence. The true self-directed industry has the remaining 3%, but its share is rapidly growing. And understandably, Americans have become disillusioned with those traditional investment choices. And more people are feeling better about their IRA when they take control over their financial destiny. So now here comes the question, what can I invest in that has a higher return than the traditional IRA returns of less than 3% a year? Well, real estate is the answer. Real estate IRA investing opens up a huge range of alternative investments for individuals who are knowledgeable or who work with knowledgeable advisors, sponsors, and brokers. Investing in real estate for your retirement may serve as a means to diversify your retirement portfolio, to hedge against cyclical changes in the stock market, economy, and bank and government-based investments. Real estate investments hold the potential to protect against the loss of principal while generating better than market rates of return through income production and capital gains even during this period of recession. When real estate investments are not leveraged, both income and capital gains can flow back to IRAs tax deferred. Now, what return on your investment can you expect from a self-directed real estate IRA? Well, here in the state of Michigan, the Michigan Self-Directed Real Estate IRA team serves as your real estate liaison. As your real estate liaison, we are offering to purchase and rehab, that is to clean, repair, and paint homes in the southeast Michigan area. The average cost of the home is about $50,000. From there, we rent the home to a secure Section 8 or lease option family, which means the rental payments come directly from the federal government. So to figure the return on your investment, also known as ROI, you only have to subtract the operating cost from the rental income for the property. In our example, we use the conservative figures for expenses on a house of taxes at $325 per month, which honestly is probably much too high, and $180 per month for property management, insurance, miscellaneous fees. That's a total of expense figure of $505 per month, and in reality, probably less. An average house in the southeast Michigan area will generate $850 per month in rental income. So, with these figures, the average home has an operational profit of $345 per month, or $4,140 per year. With the average cost of $50,000 per home, it's generating a return on investment of 8.28%. Now, compare that to the average return for a 2-year high-yield CD that has a current return on investment of less than 2%. Actually, as of October 15th, 2010, the rate was 1.66. So if we round the rate up to 2% over a 10-year period, a $1,000 investment in CD will generate $221.19, while a $1,000 investment in a Michigan self-directed real estate IRA, rounded down to 8%, will generate $1,219.64. That's almost an extra $1,000 for every $1,000 invested in your future retirement. Over a 30-year period, a $1,000 investment at 2% will yield $821.20, while our conservative 8% return will generate $9,935.72. A $50,000 investment would make almost $500,000 in profits, and $100,000 would make you well over $1 million. The big question is, where do you want your retirement funds to be working? The Michigan Self-Directed Real Estate IRA team is an investment group based in Southeast Michigan. We specialize in helping retirement fund investors, small business owners, and others invest their money and maximize returns. We have access to large quantities of properties, and that allows new and seasoned investors to benefit. Buying the right investment property isn't easy, but we pride ourselves in making it easy for you to succeed. If you would like more information, please go to our Contact Us page and submit your questions or concerns to us. We know that you'll be happy with what we have to offer, and even more happy with your future returns.